Hello, everybody. This is Chris Valenciana with bennathanfx, doing the weekly wrap here for the week of June 10th through the 14th. Just to share my results with you here. So slightly down week, but definitely controlled risk. So at the end of the week here, I'll show you the trade I took with the U.S. Canadian dollar. And then this is kind of a prime example of starting with a small position, and if it goes your way, you build it, and if it doesn't go your way, you kind of just hold for that small position. So I did click out of that. So I finished the week down 0.14%. For the month, I'm up 1.74. I know Jerry's doing very well in the room too. So as a whole, we're doing well, and I think kind of the theme this week is controlling risk for me. In terms of what we had going on this week, there was some I'd say pretty big moves with the dollar. So the dollar finished bullish here with retail sales coming in above expectations and also significant back month upgrades. So it went from negative to positive and up from flat for the readings there. The PPI and CPI numbers boosted Fed easing probabilities to 30% for next week and then 90% for the July policy meeting. But I think retail sales kind of threw a wrench in there. But really, the big reason I think the dollar was bullish was it's kind of benefited from some safe haven status. You've got the Iran issue going on in the Middle East and just some real geopolitical issues and trade war issues. It seems like the U.S., we can't get along with anybody right now. Pound, we still have is real bearish right now. Dire UK GDP and some political uncertainty and Brexit jitters. Boris Johnson is the lead candidate, and he's known to be okay with a no-deal Brexit. They also voted that down in terms of preventing a no-deal Brexit. So I think ultimately they're going to make a deal with the Eurozone, but right now there's still a lot of concern. Whoever the next prime minister is, it would be, I think, irresponsible to just clear cut it. And I think the Eurozone eventually will cave in and they'll make a deal here just because there's so much to lose in terms of both economies. So it's bearish, but personally, in my opinion, there's a limited downside to it. Euro is bearish right now. The downbeat Euro macro news all week, and then just the ongoing Italy-Euro budget battle. Not a lot of positives for the Eurozone right now. And once again, I think it's being dragged down by this whole Brexit issue. Canadian dollar is neutral. Real upbeat data from a week ago. But I think there was a spike and downturn as kind of the Iran Gulf issue goes up and down, and then I think it got hit a little bit here with some dollar bullishness from the U.S. So Canadian dollar is neutral right now. Australian dollar bearish. Mixed to week jobs data that underpinned forecast for RBA easing, and really with the China-U.S. trade issue continuing. A lot of forecasters expect the Australian dollar to continue its downward trend towards maybe the 66 level. So keep an eye on that. Kiwi bearish as well. Manufacturing PMI only just avoided contraction. So the recent guidance is kind of coming into question here on what was a bullish rate cut, I would say, or hawkish rate cut when the Kiwi did do that a few weeks ago. Yen is bullish right now. Risk-off environment. Pretty much U.S. and most Asian countries are deteriorating, and also the European Union on tariff talk, diplomatic issues, etc. Swiss franc is neutral, so that's an interesting one. So there were some safe haven flows due to the trade war escalation and what was interpreted as a less dovish S&B statement. But they really reiterated that they can intervene, and they have a bunch of tools that they can use to prevent the currency from getting too overvalued. So I think the Swiss franc, there's going to be kind of limited upside to that because the S&B does not want that thing strong if they're going to grow their economy and get inflation up where they need it to be. So that's kind of the breakdown of how the week finished. Like I said, my trade here, this was a U.S. Canadian dollar trade, and I mean this sucker just spiked up here. So as it was going up, I was kind of looking at this level here, this 80 level. My stop loss was actually at the figure at 134 even, but to me, this was kind of the level that I was watching for to see if it would break or not. And, you know, it was really pressuring it. So I just got out. And if you look at it, I saved 20 pips and probably a 0.25% extra loss. So, you know, the sentiment just didn't line up. The US dollar was really bullish going into Friday. And it's a good carryover currency right now because of the rates. So I didn't see that there was going to be any kind of sell-off on that. So once again, you know, part of this game is risk control. You can only control yourself, as my partner here Jerry says all the time. You can't really control the market. It's going to do what it's going to do. And like I said, you know, controlling my risk was critical for me. So that's kind of how it shaped up. So next week, you know, should be interesting. Hopefully we'll see some good profits here. But you know, for the month, we're in decent shape. I think going into the halfway point. Yeah, hey, you know, if you're not a member with us, I encourage you to give us a shot. You know, we have a free trial where you can come check out what me and Jerry do, and we look forward to seeing you in our community. Thanks.